Bank of America just releasing quarterly results. Leslie Picker joins us right now with the numbers. Leslie, good morning.
Hey, good morning, Becky. Yeah, there was a pretty big jump in investment banking revenue that really helped drive that top line up by about 11% at Bank of America in the third quarter. The firm reporting $28.2 billion for that top line figure and $1.06 per share on the bottom line. Net interest income beating expectations, up about 9%. That appears to be thanks to higher loan and deposit balances, and B of A revising its fourth quarter NII guidance to the higher end of the prior range, now $15.6 to $15.7 billion. The company seems to be encouraged by that loan book, with provisions for losses decreasing. The net charge-off ratio, which is essentially the proportion of loans that the bank expects to not recover, decreased to 0.47% from 0.55% in 2Q. So really going in the right direction there. And as I mentioned, banking, huge quarter here for Bank of America. B of A reporting $2 billion in revenue from investment banking. That was up 43%, guys. That gain was largely due to its business advising on mergers and acquisitions, as well as debt capital markets, where revenue was up about 51% and 42% respectively. And its equities trading division saw a record Q3. That revenue for that division up 14%. Return on tangible common equity for B of A, that's a measure of efficiency. That was 15.4% in the quarter, and that's 260 basis points better than a year ago. Shares currently up about 2.95%, over 3 now in pre-market trading. And I'll be sitting down with CEO Brian Moynihan later today on Squawk on the Street, guys.
And Leslie, you're now 5 of the major banks in. I know we've got Morgan Stanley later this morning still. What's the overall takeaway on what we've heard from these big banks so far?
I would say the overall takeaway are the Wall Street businesses are still performing incredibly well. You saw with Bank of America up 43% for that M&A advisory business. That's tremendous. Goldman saw up 60% in that same business yesterday when it reported. So those Wall Street businesses, the capital markets revival that we've been talking about for so long, that's really filtering through into earnings. And then on the consumer facing and the loan book side, everything looks pretty good. As I mentioned, the provisions heading in the right direction, the net charge-off ratio heading in the right direction, all of which would suggest that, these CEOs feel like the consumer is resilient. Corporations are still doing deals and financing certain transactions as well. And so everything looks okay, but every CEO will also mention, that there is a lot of uncertainty out there. So they're kind of cautious about the overall environment while posting very, very good results, especially relative to history.